Okay, let's get going here. How are we, guys? Welcome to TradeSetup and the live stream for the 27th of February. Hope we all had a great weekend. We enjoyed ourselves. For myself, I did have a good weekend actually. We had a jumping castle in the backyard when my boy's 5th birthday. That was actually Friday, so we had that come over Friday night. We had a bit of a play on that, and the kids are over on Saturday morning. Bit of a kids party, running around, giving them sugar, which is always good for the parents. And then we had our folks over that night, so that was a good weekend for us and relaxing yesterday. So yeah, had a bit of a play on the jumping castle. And I don't realise how actual hard it is. I'm a bit stiff and sore today, so we'll see how that where we pan out. Anyway, hope we all had a good weekend. Back into it today. For anyone that's new, you can just look at the screen there. You've got the live stream details. You've got us. You can join TradeSetup, top left-hand corner on Twitter, or go to the Facebook page, link into us there, or subscribe down on our YouTube channel, which is on the bottom right-hand corner. Also, just for the newbies, what we've got here is our general advice warning. So just to let you know, we don't take into account anyone's personal circumstances. We're just giving a view of our market and how we trade and just talking a bit about that and really just what we're looking at overall. And so we'll go through some positions we have as well, some of the alerts that are currently active. Not too many at the moment. We've got stopped down a few. We've taken some profit on a few as well. We got whipped out of a few and they pulled back on us. So locked in some gains, which is good. But we've only down to about, I think, 4 or 5 alerts out of 10 at the moment. And I think at one stage we were up at 10 not too long ago. Well, let's get into it. Take a look at the markets now. Alrighty. We can see that we're down 23.5 points at the moment. It did open down. I was thinking it was going to open more flat to down a bit, and it was down about 10, I think, just on the open. Thereabouts, and we drifted lower during the session. I mean, the US did finish up, but it was really under the dying last few minutes, which it got pushed up into a positive on the close. I think most of the session was just drifting, holding a few minor losses for the session, banging around down a bit, and then into the close. It got bought up a bit into the close. So the US did close up for the session on Friday, but Europe was actually down. So I think the DAX actually was hammered a bit, really over 1% in the end on the futures. So I think they've got a few issues over in Europe. There's a bit of uncertainty over there as well. I think the French elections coming up, which could be a potential Brexit, but more of a minor scale, but they're looking at that. I think there's been a bit of Le Pen, their presidential candidate, has been talking up leaving Brexit. So yeah, that'll be interesting to see how they go. Now, today, it was mentioned, I've chatted about it with Paul. Paul's on the stream, and I'm guessing he's in now as well. He said he had a delayed meeting, so he's going to try and pop his head into the live stream today. But just chatting with Paul, and he suggested, and I mean, we've said this before, we're trying to build a community with the streams, chatting about our trading, and it's good seeing different trading styles as well. It's not all, g'day Paul, it's not all just me talking about different trades, but also what we want to try and do. Maybe it could be a bit of the old competitive juices flowing, but getting people, if you want, just putting into some charts. Even there can be past trades, there can be trades that you've done, positions that you've got, anything like that that you want to just chat about. If you don't mind, you don't have to put in any quantities, anything like that. It's really just a chart of where you bought and where you sold, or where you if you've got a current position, where you bought that. You don't have to talk about how many you've got, the dollar value, any exposure like that. But it'd be good just to talk about, and then talk about why you entered it too. Might be worthwhile, say I entered this because of the high low, or it was buyers are starting to step up to the plate. It looked a bit positive, so they had some good news flow. There's a catalyst there. Whatever it may be, and it doesn't have to be just ASX stocks. We're going to focus more on the FX as well. We're going to get into more of that as well. I think that's important. Just a lot of people do focus on it, but it's also important for the global macro view, which is always swinging our market around a bit. So it can be anything you want to have a trade. I've got, I'll show you some on the SPY futures potentially. It wasn't actually, I've got some trades. I haven't done any of late, but I've got some recent, well, I guess they're fairly recent from the past. A couple of wins, a couple of losses, and I can explain why I got into those. We've got our positions, our actual alerts. You all see if you're following Trade Setup. We can chat more about that and what we're thinking about going forward, because it's always, well, I guess we all know it's just as important having a plan of attack when you're getting in to getting out as well. You can't just sit there and hope for the best and just see where it goes, because it could easily retrace on you. You can go from a profitable position to a negative position quite quickly. So it's always good. And I know we were chatting about this also with Paul, brought it up about WBC and why I would have got out at that resistance level, when obviously time frames are different. We have different time frames, but why I got out there. And that's just a strategy I use, I employ. But it's always good if you look if you can put in some trades, and just to see what strategy what sort of style of trading you use, what your entry setups are, what you're looking for in the market, whether they align to what we do as well, or whether you do it differently. I mean, in all honesty, it doesn't matter so much. I mean, like Paul and myself, we attack the markets probably a lot differently. He's more of a longer term trader, and he's actually sent in some of his positions we can do a bit later. But it doesn't matter, as long as he's consistent in what he's doing and I'm consistent in what I'm doing, we should be pretty good. Obviously, if you've got an edge that's not working, you've got to change that. But if you found an edge that suits your personality, that suits your time frame as well, what you like to trade, and also what sort of hours you have in the day that you can allocate to trading and prepping the market and researching as well. I mean, if you're a fundamentalist, you've got to put a bit of time and effort into your research. So as long as that suits your style, it doesn't matter what you do. We don't have to do it the same. As long as you're making money, that's what it comes down to. Now, if your edge is not giving you money, you're best to go and change it and do something else. And then from there, what you're really doing is on your style is tightening the nuts and bolts. Just trying to tighten up on what you do, and then just refine it to what obviously better suits you. I know Paul and I have actually had a chat about different things and what I look at. Doesn't mean he's got to do it. It doesn't mean it could work for him. But it might be something there. He looks at it and goes, "Oh, hang on a sec. I quite like that. I quite think that works. I'll try doing that with my trading, and it might just help him tighten up his own style." So I think it'd be great to talk about. I'm more than happy to chuck in different things when I, if there's something different that we're trading apart from the ones that you actually see from personal trading to SPY. I'm happy to chuck those in as well, and just to go through why I got in, whether I win, lose, or draw, and just talk more about those. We'll just see what comes about, and see if we can just grow a bit more. It's good for educational purposes. It's good to talk about understanding the markets better. But yeah, I think it'd be great. But you can send anything like that to support at tradesetup.com.au. So yeah, feel free to send it any time during the week. We've got obviously the streams on Monday, Thursday at 12:30, and then we'll have a chat about it. Well, let's get into it then. What we'll look at, we'll start off with the XJO. It's actually, we were discussing this, potentially it could have popped up, and we'll get it closer. I've got my obviously you can see that, the new mic there. It's a bloody big thing, I'll tell you that much, and it sits in the way a bit. And it's strong and solid too, it's quite heavy. It can get dangerous in here, if my wife comes in anyway. Right, you can see... She doesn't watch this, so I'm safe. You can see that we were talking about it here as potentially this could have just popped up through 58.27 and on we go. It didn't, in hindsight. It looked like it was starting to get rejected around 57.75. But one thing you just got to always take into account, you've got a double top, and they're quite a strong technical setup. So really, we've had this leg up from 56 up to 58, just over 200 points rally. Really didn't look back apart from one, only mildly negative day. Probably, what day was that? I don't know. It was about a week and a half ago, 14th of Feb. So I had a good little run up to 58, 25, 27. So it really is just making a bit of a deeper correction. So we've got our key level down at 56, really. That's what we're going to be, whether the market's just going to pull back and pull up short of that level and then build another high low and then go again up towards that 6,000 mark, which I think there's a lot of traders gunning for. But we'll see how that goes. We just can see the market is it's still doing good. Still doing very nicely on a weekly basis too. That looks quite good. It's holding higher lows. We had... obviously, that pushed down to 50.50, and that's the current action leg up. And really, the next major stop is at that 6,000 zone. On a daily, this is the key level at 56. We could get that double top, and what we're going to be watching for here, I do expect that to build a higher low, and then what we just have to keep on top of is to see if it actually builds and pushes up through 58. If it can't get up there and start stalling, we get a couple of down days, a bit of selling pressure come into the market, some bad news out of the US. The US is starting to flounder. Then that potentially could be a lower high. And then we always like to see our lower highs, because if that's the case, it could... You'd think if you got a lower high in, we took out... you'd be gunning for 56 and lower. I'll draw it up what I'm talking about. Just going to get it on my chart there. I'll draw it up in the daily. So, I know they're different prices, but like we said, it's the same price structure we're talking about. So we've got essentially a double top up here. We've got a support level down around that 5600. Now, what we would ideally want to see is we've got our bit of a pullback here, hold some high lows, and that to take us up. And you want that spike through, and it can pull back into the zone and then go again. And that price action should take us up to the 6,000 level we're looking for. Because this is a nice little base, a nice high low. Spent a fair few days, probably a couple of weeks, making that high low in there. We have just got up into resistance, and there was a reaction like we've spoken about in the past. You're always looking for these... G'day, Nando. How are you, mate? We're always looking for support and resistance zone just to get an idea of where we would expect action and reaction. What sort of... Are we going to get some sort of reaction off there, or is it going to blow through, and then what's going to happen from there? And we're just trying to get a feel of what we could expect to play out in the future. Now, this is what we would expect, somewhere to pull up short of this 5600, maybe a little bit of contraction in there, and then hold some minor inside higher lows, and then that should take us up through the 5850 and so on, and up to 6,000. Otherwise, if we do get... We'll just take this off. If we do get something a little bit different, and we sort of pop up here without really any contraction, and then we start doing the reverse, if it wants to draw it for me... If we get up here and start holding some minor inside lower highs, then I think we've got a bit of a problem, and we could be diving through... You'd think the next port of call is to go through 5,600. Does that make sense there, guys? So this is, from here, it's all about just, seeing what sort of price action we get. If it's still positive, if we get some major negative price action, then I think we might get a bit of correction in the positions. We'd have to just be careful of what positions you're taking if this market's going to roll over, because with that style of price action, with a lower high off a double top, don't forget that's quite a strong technical. We call it a retest fail. So it's tested it once, it's retested and then failing, and it's not a confirmed failure just yet. But once we get that, if we get a lower high, that's going to give us a few issues, I think. And that's where we would be looking for, if that's a low there, looking for a breakthrough there. As soon as you get that breakthrough there, you're looking for you're ideally gunning for a deeper correction, and that means it's going to go through 5,600. All right, and then you're really just looking for levels on the downside where it could go to 53.80, say this little level here. Then you've got another minor level here at 55.09. So, it could be a couple hundred points dive in that if that's the case, but. Really have to just wait and see. Yeah. You calling me son or soon? Good work, Paul. Yeah, no, look, it's and that's the way it's been going. It's okay. We got another record high on Friday, but that was the whole session was down, and it just popped up into the close. There might have been a few shorts jumping in, intraday traders expecting maybe a bit of a rollover, and then closing out at the end of the session. Which happens, but it means there's still, by looking at that, there's still a few players holding back, and I know Trump has got a speech to Congress too, which is coming up this week. I'm not exactly sure when. I'll see if I can find out. You can always look. I don't know if anyone sees this website, Forex Factory. You can just go through there and check out what's on the agenda. And US is normally after midnight. Let's just see if he's got anything popping up. Does anyone know when he's meant to be talking? It may not. Look, it may not be showing up here. All right, not to worry. So yeah, if he comes out, I think that's why a few people are just sort of holding off, diving into the market. Purely, we're up at some good levels. Obviously, all-time highs, the 28th. Is that tomorrow night? I'm guessing then. Yeah, tomorrow night late, so that'll be early as hours Wednesday morning, won't it? If that's the case. So I think there's obviously they're going to see if he's got any more. So I mean, he's saying all these things about tax, his plans for growth and all that, but he's not actually given any specifics. And I think the more he talks about it, the more I think the market's just getting a bit skeptical of what he's going to do. So they'll be looking at obviously what he's saying in his speech towards tax reforms, and then obviously that's again, are we going to get as many rate rises as they're talking it up? Because I mean, if he doesn't give the reforms we're all expecting, this market topples over a bit. It's not as positive a market as what we thought. Like we said, it's spent 11 days up at all-time new highs each day, record closes. Sooner or later, there's people going to be taking profit, and this could come in crashing back down to earth quite quickly. Yeah, so it'll all be interesting. But anyway, this is the ASX. So we'll just see how that ASX plays out anyway. So we could just be stuck between these two levels. What's that? 56 on the downside, 50. I know it's a couple hundred points. 58.29 on the top side for the next few days, just sort of banging around. We could even be stuck around that 57 mark where we currently are. I was at 57.20, 30 for the next few days until that speech comes out and see what he says. Now, I've got the Aussie, but we won't get into currencies too much just yet. Now, is anything anyone wants to talk about in the way of some stocks and what we might do? So just bear in mind, we'll look at those, put them in the chat. We might look at a few things. I know Paul sent through his, I don't know if you don't mind, Paul, sent through his positions. So if you're all good, I can whack those up just to show you. I'll just go through. He's got, like we said, Paul's obviously focuses more on the longer term growth, and he's looking at his fundamentals of different stocks, whereas I'm not purely, obviously, but more of a technical analyst. And I will go through and look at something that looks good. If the chart looks good, then jump in and just check out what the latest releases, get a feel of what they're doing on the fundamental side, what it sounds like. If it's a good story that's been building and the technicals look good, then I'm happy to look for the entry. So that's the basic, I guess, the way I structure my trades. First things first, just flicking through charts. If something's heading south, I might have it on the radar if it's got potential heading down to some good support zone or whatever. Just put it on the radar, put it on a little watch list. But generally, I want to see a certain price action first before I really worry about what the fundamentals are. And there's times where I don't even look at the fundamentals, to be honest. The setup looks great, and then just trade it from there. And just try to, like I said before, manage. We're risk managers. We're not, don't look at yourself trying to be right, wrong all the time. You're just managing risk. Once you've done all the hard work and you're actually into a trade, don't worry about being right or wrong. Just manage your risk, and try to be mechanical about it too. Not trying to be, you don't want, once you're in and you've done all your analysis, and if it's working to plan, you don't want to start chopping and changing. And if it goes against you, things don't start working to plan. And this is where the hardest thing about trading is not chopping and changing after the fact, because you don't want to take a loss, or you're trying to give it a bit more room to move. I mean, don't get me wrong, I've done it a fair few times. So, and you tend to do it on the shorter intraterm trading too. But yeah, we've got, just whack that across now. So Paul has got, we know we've got BSL, which I think he's going quite well on. We'll look at those in just a second when I put the chart back across. Also got Linus, which it's a shame I actually missed that. I had traded that a while ago. personally on. I think we had it as an alert too, which really I think we got break even, or we might have lost a little bit on that. But who was it? I think it was Clement that brought that one up too, and it looked great. Just forgot all about it, to be honest. And BSL looks good too. Big drop in front. None of BSL holdings bought at 422 and 687. Well, you can see that he's up doing quite well. Entry price is threatened. Okay. So it's good. He's put together this spreadsheet of just what he's got, and he's put some notes in there, which I think is good. And it's good that it keeps him in line too. I think it's doing things like this just to keep yourself in check is always good. Because then you know why you entered it. You've got a bit of a plan. I tend to, I always take a snapshot of the actual stock and what I expect to happen. I can draw it up. I mean, you've probably seen a bit of it on the morning jumpstart with the ASX200. And especially when I'm trading intraday, because I'm just trying to figure out what are my key levels, where I expect action reaction. And then I've got my setups. I try to work off those key levels. And then you're trying to work where potentially, well, this is with shorter term trading, where people could be getting trapped. If they're going to get trapped, what do you expect to happen? What could get people caught in the unknown? There's a few different things I'm looking for, but basically I would prep up a market, put everything on there, and then I've got my plan of attack. So if I start veering from that, sometimes you might have to change it during a session if you're trading intraday. If it's longer term stuff, it doesn't matter too much. But if you've at least got there saved away or on a file like Paul's got here of the reasons why you entered it and why you're going to get out and what's going to prompt you to get out. So whatever works, stick with it, and just it's great having some sort of spreadsheet like this, I think, and it's really good. So some of your longer term holds, you got AMP, Bank of Queensland, BHP, Boral, BlueScope, BT. We've looked at that one too. Combank, growth and dividend. Yeah, that looks good. So a lot of these you're doing quite well on by the looks of it. Maya, we've looked at that in the past. We've got Linus too. Westpac. So now you got some good ones there. Yeah, so Telstra's a dividend play. South 32 looks good. I actually think that's got, small holding. Doesn't matter too much. But that looks good. So you can see he's got quite a few positions there. What does that make it? What's that? 16, 17, 19 positions by the look of it. 18 positions. So no, that's good. No, you actually, if that's the case, it just depends if they're all gains and they're losses, you're currently up or down. Strike rate wise, that's quite good. What you could do, Paul's, do you take, I'll show you my spreadsheet. Do you take a little, just put together something like that, and it just shows you what, and this is always good to see what sort of ratio, I'll say that probably, ratio you're sitting on. I like doing that, and I used to do a lot on the futures when I was trading intraday, just taking, say, end of each session, put all my trades down, mark it up and group them in the groups of 20, just to see how you're going, and then put a little note, why I got in, what happened, was it a good trade, was it a solid trade, was it a break in my rules, and just be honest with yourself. So what will happen after a few groups of 20, it stands like a sore thumb why I'm losing money. Okay, and it's always good just to see over, because then once you get into it a bit and you've got a whole list of trades under your belt, and live trades too is probably, I always think is the best way. It doesn't have to be big, because you act a bit differently when it's live and when it's not live. But anyway, if you get some under your belt, then you can see what your strike rate is, and you don't need, mine at the moment has drifted a bit low, to be honest. It's normally around 60 to 65, somewhere around 62, 63. We're down at 57. Losses are, out of 138 trades, 54. 4 break even, and we've got 5 open, 80 wins. So strike rate's still pretty good. And then from there, if you could, what we call it is the edge ratio, and it's really what is it 2 to 1, 1 to 1. What's your edge ratio? Is always good to just see. I mean, if you're consistently getting 1.5 to 1 at least, even 1 to 1 at these stats, technically you can make money. It's just a numbers game after that, and that's where it comes down to sticking to your rules, sticking to and just being consistent in the way you go about trading. So yeah, I think that probably might not be so bad, Paul, if you just take together and just make some notes like this: why you got in, what the exact reason why you got in, which you've got here, and why you got out. Did you hold it past where you thought you would have got out originally? And just make some notes on trades that you've closed. Try to put together a bit of a win-loss ratio, and that way just analyze it over time and just seeing which way you're drifting. If you're a longer term holder, it may not be as necessary, but I know with my style, it's Davin's style too, we've all learnt to be doing this, grouping into groups of 20. So when you're consistently trading and if you're not hitting your stop levels and you're pulling it back or you're doing it, that will stand out in each group. If you say, I've had my major losses, if I just cut out that one little thing, it could be something minor, you just change it and let your stops get hit if they have to, you don't widen it, all of a sudden your ratio might be a lot better. It might go, it might go from 1 to 1 to 1.5 to 1. You're just cutting out those losses that you consistently, the bad habits you have. You're trying to, and that's what you're trying to do over time is you've got your edge, put it together. Try to develop a spreadsheet over time. That's good. That's good. No. I'll show you some trades. Don't ever be embarrassed on it. I think the best way I learned it was when, this is years ago, when Davin was actually doing a stream. It was pretty, I've put up trades when I've got like 20 trades, and when I look at it back on it now, 20 trades in a session, I was just going nuts, just going in, out. And you look at it, and even though I thought it was a bit stupid at the time still, I would still happily put it up there just to hear any sort of criticism, because it's better coming from me personally. I always found it better coming from someone else. Someone that has been there, done that, and just understanding, and just for hear him to say, maybe you traded too much. Okay, it's pretty obvious, but yeah, it's good to hear it. Maybe this entry is good, this entry is good, but this entry was just a bit more of a revenge trade, because you can see it on your charts once you send it out to them. But I always found that helped me a hell of a lot. It helped me start refining my entries. It helped me, because everyone does the same thing. I mean, anyone to turn around and say that they haven't got some embarrassing trades, I think they're not being honest. So yeah, no, I think it's great that you put up there, Paul. I'll let me just see what I can find. If you want, I can put up a couple of spy trades, maybe what I've done in the past, if I can actually find them. Just bear with me there, guys. Sorry, just to go over what else, Nando. Yeah, does probably too many. Nando, what was the big gains in the 2017 Cobalt? Yeah, we did a presentation on Cobalt a while ago. 2017, 2917. We've got to wait 900 years. Now I'm just trying to find. So just to go through, we'll just click on it. This is what I got into the habit of doing also was marking up even after the fact. If I didn't trade, I'd like to go through the session and just mark up trades that look really good. Yeah, so just looking at what I like to do is just mark up different trades, mark up different areas, and just some actual trades that go according to my plan and what I like to see. I think I've got some trades. Maybe I haven't. Oh yeah, got some trades later. So just marking up as we go and just taking a snapshot, and so it reminds you of what you're looking for too. So with my technical way, the market's opened here. I think it's about right. Yeah, about 10 o'clock. Went sideways for it and just capitulated down. And then what we're looking for is that reaction, whether there was a major support. We've got that reaction up, and I'd like to see that, some higher lows building, but the overall leg is from way up at 32.15. So I know that's just contracting that leg down. We got up, and then what I'm looking for here is this support line to break, then my little shoulder trade, and ideally where that little breakout there, I can see I wanted to sell it through there. That would be my ideal setup. Now, we don't know where it's going to go. Obviously, you want to see if it can get down to the prior lows, which it did. Over the longer term, it went all the way down. But you can see I just like to, we'd always go through after the session, take a snapshot, mark it up, and put it in the file just to reference later on, because you get used to seeing intricacies of a market too by doing that, and just looking for what type of setups are playing out. Do they work out to your plan? And again, this is that little washout we said. The market's just washed out the highs and then capitulated and rolled over. Again, we've got a couple of little trades here. That was probably a bit late to the party, that sell. I think it was only a few points gain in the end. Bugger all, really. That was a good little sell. We got in there okay. But really, I think the major move was up here. So taking that snapshot after just reminded me to try to look at the bigger picture a bit better. And you can see that market's contracted lower, held that support zone there, and we started to push up. And then on a breakthrough here, you expect the market, there's been a lot of buying through here. The market's obviously pushed up strong. A lot of heat's come at it, but it's been bought up, held up at a higher low, and then started breaking and going higher. So that again was just trying to remind myself to, to look at the right setups. And here again, that was a little sell we took. You can see the market's rolled over, made a lower low. It built that lower high, and I'm trying to take it on a little break when you start to see that failure. What may stand out is some days, whether it's my impatient, I tend not to hold those too long, which I could actually hold it for quite a bit more. And you can see that was only probably a few point gain in the end. Just see what else we got. Again here, little gain, and the thing took off, so it did exactly what I thought. Just couldn't manage to hold it. Whether I was going somewhere, I don't know. But again, a few point gain on that. There's a couple here, if I can find them. Yeah, so I also do a lot of this. This might be worthwhile for people to do, just especially with your technicals. Draw up a chart, mark it up, just mark up things you see. Even if it's in hindsight, it still helps. Everything helps. Mark it up, check out, we get a bit of a washout. Okay, we got a washout through those lows. That was a major support zone. And we started lifting off those lows. You can see that we washed out to the top side here. Market broke resistance. So I'll just mark up all these little notes just to get me looking at the right areas and the right things from time to time. Now I think this one here, that's a 1 minute chart. That's a 5 minute chart, I think. So you can see the type of time frames I enjoy trading intraday. Buy. We've got an original buy here, got stopped out, jumped back in again and made it back plus more with that little spike higher. So that was a nice little trade there. 9 point gain on that one there. So it's just a matter of just sort of consistently looking for the same setups and just marking it up. So I always like to take, like I said, just mark it up on a chart, take a snapshot of your trades, and then just go from there. And I always go back from once, maybe every few weeks, just to check out, just to keep myself consistently looking at the same thing. And if you start veering off track a bit, it's always good to come back. So I think this type of style too, using and what you're looking for, is transferable to different markets, to different time frames. This is a SPY 200. You might be doing the exact style on foreign exchange or looking at stocks. Stocks generally a bit cleaner, and you get cleaner setups, but generally we're looking for very similar setups, and the same type of market structure. So yeah, any questions on those guys before I get into it too much? But I think if anyone's got trades like, that marking up, yeah, feel free to send it in. I can show you some that I've got whitewashed on too. Just got to go and find them. But yeah, this is another one, just marking up the actual trading areas and why, what I felt, why I took it, what happened. Anyway, I hope that's helpful. But that's what we've learnt to do in the past. Analyze your trading, and then over time you start refining. You see what your weaknesses are. You try to get them out of your trading as much as possible, or try to minimize them as much as possible. Anything that you're good at, or any trade setup that you find that always works for you, or works for you at a high rate, they're the ones you focus on, and then you try to add to your repertoire as you go. Add to more setups. Pick something that suits your style again. So you got maybe one setup. That's all you need. You can look at different markets. You can just use that one setup all the time. Analyze the market. You see it. You go in because you're confident with it. Then add to it. Maybe another couple of setups, and so on, as you get better at better at your edge, I guess. So any stocks we want to look at. But yeah, if we can, while I keep ranting, just if you got something that you want to send in, it'd be great. And I think time to time I've got some trades, I'll keep putting them in as well. It's very hard. And I've got a few little issues which I'm slowly getting out of my trading, but they still hang around. I feel doing really well on stocks. I don't have a problem. I think that for me, it's like a challenge to get good at intraday trading or to just refine it. Consistency's there, but I think you can see from some of those trades it could be more consistent. So I don't get the sort of the 2-to-1 ratios I get on stocks or better. But my strike rate's still around 60 to 65%. So I know that, okay, I'm profitable because I'm generally sitting, from what I look at and the way I set up my trades, 60 to 65% strike rate, which, okay, if I get 1-to-1, that's great. It means I'm profitable. That's all I care about, and that's what it comes down to. But what I wanted to try and do is be able to hold longer, trust in the style a bit better. And it's a bit harder on intraday stuff. They tend to be a bit whippy. You've got to be a bit more focused and so on. But that's the idea with that style of trading intraday, is just to get a bit better at holding, run them out to the targets better and all that sort of stuff. And then the profitability might come a lot better. And then you've got 60 to 65% strike rate, and I'm getting 2-to-1. So all of a sudden, and then you get that odd one that could be 4-to-1 and so on. That's what you want. And that's where you're going to increase your profitability. Stocks, for some reason, I actually quite enjoy. I find them, there's a lot less time to worry about them too. Sorry, a lot more time to worry about them. But you're right there, Paul. So we've got SAS is one that's really kicked on for us. Actually, let's go to, wasn't Andor saying LIT? Let's just go. LIT, well, Lithium Australia is one we've been involved in for a while. We had this little run up here. I can't remember, it was just in here we bought it, that run up. But either way, we've got some really good results on LIT. It did well, and you can see that price structure. It played out once. We had that good little run up. Bit of contraction. We're looking like we're building, but we held that high low, and then you can see that again, it's that same trading, that same setup that happens for us, and what I like to see. And generally, the reason I like it, because I know the stock's moving. What I'll do, so it's that setup there. You can see it's just contracting in, and you know that sooner or later that's got to break. It's going to do something. You can see the higher lows holding, and after this run up, your bias really has got to be to the upside. It's holding higher lows, so you know that's going to wash out some of these traders sooner or later when we broke higher. Entry could have been just with a break through that high. I'm not sure if that's a one, but then you got the same style of setup through here. Marcus broke through those highs, and away she went. So that's a cracker. At the moment, longer term, it's obviously heading south a bit, and we just got to see if it's a similar. For me, you can see that the market's still heading down. I think it's got a bit of work to do before, but it's definitely potentially doesn't make sense. But it's definitely contracting at the moment, and we just got to see if this is going to be a high or low. So really the two key levels for me on this one is around 21 and potentially around 4. Is that 4 cents? So I know it's a wide range, but if this market sort of pushes up and starts breaking up out of that contraction, then I'll be looking at that for sure. But if it turns around and heads south straight, touches down towards 4 or even just cracks that, then I think we could be heading down to some lower, quite lower levels, but we'll see how that goes. Was that the other one? What was the other one you're talking about there, Nandor? Finish off this cold coffee, ice cold. Yeah, that's looking good. We'll get on to our some of the other ones we got. We said we got SAS. That's looking good. We just have to see how that plays out. I think we could still have a few more cents in that. Have to see how it's good. It's been a good little story. They've come out with some good news releases. I think today come out one saying nano satellites designated as ready for launch. So I think they're hitting their targets. They look good. Structurally, it looks great. I think it could still potentially have some more to run in that leg up. But I think it's going to be hard and fast if it's the case. AYR, we'll look at that. AJM's one we've got. It's done nothing much for the last few days. It had an announcement today, which potentially is good, but it's not a massive stock. But ideally, that price structure is still looking really good. You can see it's had a good run up, and that was sort of most of 2016. Contracted in since about March or April 2016, but it's been holding towards the end of 2016, held some higher lows, which looks good. You can see that through here, and we're still potentially, if we can hold this 17 level, it could kick up through 19 and off she goes. And then we want to see some acceleration in price. If we get up through 19, you might see this little sharp spike. We'll see how that goes. AJX, yeah, that's looking a bit, we're still in there. The skin of our teeth, really. Stopped in at 62.5. We'll see. It's getting a bit choppy up here at the moment, but it is holding up above that level, and it's pushing down quite strong. So the buyers are still happy to step in at the moment. The weekly structure looks good. You know, you've got that essentially double bottom and rejection around 50, held some higher lows up. We potentially want to see it hold this as a high low and then take up. May have a bit more work to do still, as you can see by the whippiness of it all. But we'll see how it goes. Yeah. No, that's good, Clement. I guess everyone can see the comment Clement just put up. I learned a tough lesson called portfolio heat risk, where I have too many positions open at the same time and the market tanked and you lose 6 to 7% capital in a day. That's true. I'm not a big fan of having so many, whether they're short term, longer term. I'll just see how it goes. But I think generally you tend to gear them up into the one area, and if that cops heat, then half your portfolio can cop some heat as well. And you never like seeing that, especially when you're working hard. I mean, it doesn't mean you have to go and always choose ones into different areas. You just got to have always choose. I mean, I look at it one individual basis. Each stock's an individual basis, but we only have up to 10. It doesn't really bother me too much if they're all in the same area, because I know eventually I'll probably cop some heat on it where they could all roll over. But that's where you have a good quality setup with your risk. You know exactly where your risk is going to be. So if you do happen to get hit, you might be sitting on a nice healthy gain anyway. No. You've got to, obviously you do have a few positions, but it just depends how big they are. Too, Paul. If you've gone, where your normal size might be 20 grand, say a position, you've gone to 5 grand on it because you're not too confident. If you've got four small 5 grand positions, it doesn't matter too much. And sometimes the actual stock itself, it could be a bit whippier, so you just have less exposure to it. It means that you can have a wider stop on it. You can put your stop in the right area rather than, having to take some massive heat on a position if it's a bit more volatile. It just depends what stocks you've got, where. But sometimes it is, refining what you're doing there. Sorry, I just got... Alright, I'm going to have a call coming through in a second, but anyway. So, yeah, where were we? Nendo. Yeah, diversifying's good. I mean, like I said, I'm not a fan of diversifying for the sake of diversifying. If you happen to get one in a different section, you're trying to, picking quality setups is the best thing for me, whether it's a fundamental stock that's a quality one, because it can still move, or it's, technically it looks great. It's a fantastic setup. It's starting to show some really good signs. That's where I'm more focused on, that's if I'm going to diversify, that's where I would go. Don't bother with biotech, gas and oil anymore. Yeah, oil's struggling even above, it's held above 50 for a long time, but it's always that talk. I think the US keep coming out with higher inventories, whereas OPEC are actually reducing them, so it's sort of balancing that off, and people are starting to, the US are starting to ramp it up a bit as they've got a few, some higher prices, so yeah, it's one of those markets that can be manipulated, oil and gas. All right, AYR, is that the one you want to look at? Yeah, Clement too. Thanks for sending in. I know you do send in a couple of charts as well. So if you continue to do that. Even some trades you've done, whack them in, and we go through them if you want, if you feel like it anyway. It goes for anyone too, so it's always good. I think it's great. Good way to learn. AYR 580. I mean, it's hard to see on that chart. What is it? Half a cent. So it's a very low. What volume does it tend to do? The volume's picked up the last few sessions, pretty much this year, most of this year. Not big volume before that, but it's picked up. What do they actually do? Exploration projects in Australia, New Zealand, AYR main projects in the horse hall, like gold. Gold, is it? Okay. Go to a weekly just to see what that's looking like. It is holding up. It's been a lot of years since pretty much 2014, down around half a cent. It picked up, like I said, last year. Took out some of those highs around 1 cent. Held up there for a good part of 3-4 months or so. Then roll over back down to half a cent. So what we do want to see, it hasn't really built or held a higher low just yet. Had a bit of a push up there, but it could spend. I mean, I wouldn't technically buy it down here purely because it could just sit around here for a while. It could easily run up. We don't know, but it hasn't shown me any signs. If we can just draw it up. Actually, that's not what I want to see. Give it a bit more. So the initial, it spent a lot of time around here and even through bouncing off that 5 cent level. It had a level through, say, 1.4, or was it 1? Around 1, 1.2, 1.1. There you go. Popped up through there at the start of 2016 up towards $1.80. Or 1 point. That's not $1.80, that's 1.8 cents, isn't it? Yeah, 1.8 cents. Then backed off, but it come all the way back down to 0.5. So for me, I'd like to see, if the market's going to kick up through some support level or resistance level, even if it contracts a bit like that, you got 1-2 leg down, but then you want to see some higher lows holding. You don't necessarily want to see it come all the way back down to where that major support line is. After all, it's an exploration company, so they may have had a bit of a run up on some news. I don't know what's kicked it up there, and then everyone's taken a profit, sold off because they really need to keep that news flow going. And a lot of these companies that are still in exploration, they have to drill, come up with some good, and just keep drilling, keep coming up with, and build that picture, and then go into the next phase. Getting the resource, was it compliant, JORC compliant? I think it's JORC compliant. And then from there, they go into the next stage. So you can get some really good runs by the time they get JORC compliant. And once they come out with a JORC resource, then people know what's there. They can put a dollar value to it, and then from there, it's next stage, getting out of the ground. Don't know where they're at, these guys, but they could just be sort of spiking up on the back of a bit of a news release and straight back down again. So ideally, I would want to see, not a straight line straight up, but some high lows starting to hold. Okay, and then it kicking up. So whether you buy in here, but you just want to see that that curving sort of base and not down at 5. You want to see it somewhere, say around 1. If we can do it around 1, 1.1 or so on, then there's buyers happy to step in a bit higher, and whether they know something we don't, doesn't really matter. They're just soaking all the selling up, and that's ideally what you want to see, and that could really kick it on and accelerate straight up through 1.8 and so on, and then attack back to, come on, go away, attack back up to that level 4 cents and so on, and then you can get some good little bang for your buck on that. JHX, let's take a look at that. James Hardy, is this on your list there, Paul? Can't remember. Nah. I just noticed on your Linus there, Paul, you got I know you got it in both, but unsure whether short term or long term. This may sound bad, but you just got to. I guess there's one thing you just got to know that before you jump in. How you going to trade it? How long are you going to hold it? I mean, because that's the old saying, it's a short-term trade that's turned into a buy and hold because it's gone against you. So it's just one thing, I guess. Just know it doesn't matter if you've got two different positions on the same stock. It doesn't matter. One could be hold it long, but you got to that trade that you jumped in for a specific reason. Try to stick to that, I guess. JXX weekly doesn't look too bad. I mean, you can see it's still holding high lows. Most recent price action for me is not great. And we'll draw that up. Let's try that again. So, yeah, it's held high lows. And again, this is what we said, the market's washed out that support zone. And like I said, it does it time and time again. So you just always be wary of that. That's why I always try to like to see setups where it's held a high low and then breaking out. I like to trade it through like a little breakout trade where you know if it gets through there, it's pretty much it's held a high low. It's starting to look positive rather than just sit on the bid here. Because if you set on the bid, for instance, you got into it, who's to say that's not going to keep going down? I don't like that style of trade, and I like to see, ideally, this is in hindsight, I know, but that's an awesome little entry spot for Linus, and that was miles 2011. But that's a nice area, and you can see everything towards our criteria played out beautifully. If you can see that clearly, back in 2010 to 2011, in 2011. Market's contracting lower, support zone, washed out the support zone, then built that high low just after that initial break. And then you've got a nice little trade through whatever that zone, popping up through the highs, and that led to a beautiful little run up. And you could still be holding that. You could have taken a partial on the way. I wouldn't have held it for that long. But, as a long-term trade, even with your longer-term holds, you can still look for that type of structure that could lead to some really good moves. And what it's trying to show you is trying to get you this type of trading or this type of price action. You're trying to look for, you've had a good leg up. You're trying to look for what's going to be the next leg. What zone am I going to buy into to get that next leg up? And I want to take advantage of that next leg. I don't want to get in here and then it comes back down on me, and then you don't know if it's just going to go down for ages, and it might hang around here for years. That's when you buy it without having a solid setup that has got edge. You can get caught holding something forever. Not forever, I mean, it's a stupid thing to say, but for a longer time than what you initially would like. If that makes sense. So that's why I like these style of setups. You've got that support hold washed out too, so that's all these factors together pop up through that contraction zone. You can probably not see it now, but let me just get it up on this trade. That's the washout there. This candle, it popped out through that contraction, just popped up, and you come back down, held a high low in here, and then you could have traded it through 610, say. That's just on that green candle there. Stops below this high low, and away you go. That's the start of what led to a beautiful trend up. But what I'm talking about, I guess, long story short. Yeah, that's all right, Paul. As long as you've got you've got to know what your risk is going into any trade, really. Short or long term, you've got to know your risk. And that's all we're trying to do is, like I said, just analyse what risk, manage your risk. Not manage it so much as you go. All right. So the market's it's holding high lows. You've got a high low, high low, high low in here. That's probably the most current one. Yep, that's the most current one here at around 15. So what are we up at about 19? You've still got $4 downside potentially. And you can see this is potentially a lower high just in here. It's only by a little bit, but this market could easily bounce around. It could do nothing for a long time before this contraction, catches up. We could be, ideally, we're at this stage here. We may be at that stage. We've got that lower high here. We might have another 4 or 5 months of just banging around inside that contraction. We might go down, touch the bottom end, come back up to the top end and just do this type of thing until we get that little pop out through, and then potentially what we look for is higher lows to take us in and out of that that contraction. But the fact that it's so wide, support's right down at the moment, You know, somewhere around 16 to 16.5 cents is still about $3.5 to $4. If my maths is any good. Yeah, about $3.5 to $4 in that. $2.5 to $3, I think. So yeah. So you can understand that's why you're trying to look for the entry. I think this one here, James Hardy, we may see a bit of choppy price action. It's not as clean as this, where you got a fairly clear lower high, and then we worked our way back in, popped back down, washed out the most recent low, and then up she went. I think we still got a bit of price action. We may pop up, wash out that low, and then may just, like I said, contract back lower. And that may take a fair bit of time. So it's one to have on the radar, because we are, longer term, it is holding higher lows. The key higher low, the key anchor level on this uptrend is way down at 15 still. So it could have a fair bit of work to do before it gets starts building for its next leg up. But you want to see it contracting in on itself, volatility come out a bit, still holding some volume, then maybe a spike up in volume when you start holding those higher lows. Yeah. So it's what it comes down to, Paul. You've got what I think you've got something here you like. You got it fundamentally. Really, the only reason for using technical is to refine that entry, potentially refine that entry. There could be times when you've looked at your fundamentals and it just turns on a dime and goes straight up, and that's it. You don't get an entry, you know. But like I said, there's a few hundred stocks in the ASX. You can always look at something else. All right, let's just go back to see if there's nothing else. I think I've got most of them. Yeah, WBC. This is one that, see, it's just backed off there. We took a bit of a profit. We thought it might pop up through. So from here, it'd be interesting to see with WBC, the fact that it got up through those highs is not a bad sign. Even though it's contracting, it's correcting lower. It's still not a bad sign. You know that there's got to be a bit of heat come out of this market, because it's had a push from being oversold to overbought. Took out those highs and then just roll over. And a lot of these bigger stocks do that time and time again. They don't just smash through and keep going. They tend to push up through, drag in a few buys, wash them back out, build a high low, and then go again. A bit like the ASX. This is, it's looking ideally like the ASX at the moment. But we'll just see how that goes. We'll see if it can hold a high low somewhere 33, 33.5, somewhere in there, and then start looking like it's going to lift again. But we booked some profit to be on the safe side. We don't know if this is going to roll over for good. Take out. We don't know what's going to happen from day to day. We just manage it as we go and see how that plays out. But it's still looking okay. I don't know if you remember VLW. That's one we've talked about for a while. I just want to talk about this one. This is DRA. It's not an alert. I don't know if you've seen it. I've always got it in the bottom left-hand corner. This is something I've got personally. I've had it for a long time. I'm just sitting there. Got it at 27, so it's up about, I don't know what that is, about 30-40%, something like that at the moment. But just look at the price action. This is a daily. That looks a bit choppy at the moment. It's taken out some minor lower highs. It's just washed out these previous lows. Washed this level out with that move down, and then washed this level out with that move down to 20 cents, and then it's just gone bang. But just keep an eye on this weekly structure. That looks nice, and it's spent a lot of years down, 14, 15, held a high low towards the end of 2015, spent, picked up, made another, recent high, and has backed off there most of last year. And this year we've just gone up from 20. But that structure looks great, and I think it's going to pop up through that 37.5. And from there, if you get up through that 37.5, there's not a lot of key levels where it's going to potentially come into a bit of resistance there. Sorry, I just saw that. I like the comment there, Nando. Yeah. So just keep an eye on this. We'll see how it goes, but that price structure is looking quite good. I think this one could run. It's a gold stock. It's only a little one. It doesn't trade a lot. You can see it's only 15 grand, but that hopefully we start sucking in some volume soon, and potentially, well, let's just see what's happening here. Like I said, I do hold this one just for clarity. I'm not saying buy or sell it, but just keep an eye on that structure, and then you'll know whether I'll be crying or laughing. Yeah, look at that. So just that alone, you know, you can see that big solid base through here. It's around that 10 mark. Popped down through there, but that's not serious selling in there. You know, it was down, extended down here. A lot of time down here, and it's just held a higher low around 20, and it's just starting to come out of this contraction. You know, on that time frame, the next level is way up at $2. So it could go. We'll just have to see how it plays out. That's a monthly, actually. So I just want to see if I can get through this most recent high at 38. Where we trade to? It's traded 37 today, 36.5 on Friday. Had a good little run up on Friday. We'll just see how we go. It's getting a bit extended up here. So it may, ideally, if this was stronger, what I'd like to see is that pop up through the highs, even though it's a bit overextended to the top side. It's a bit extended up on the, a bit overbought. I'm trying to spit it out. See it pop up through those highs, maybe 40, 41, 42, and then have a bit of a correction, because that's not a bad sign. It's going to break through those highs, a nice healthy little correction, bring in some more buys, and away we go. But we'll see how it goes, guys. Probably going to have to call it a day there if there's nothing else to chat about. We will be back on Thursday, and I'll see if I can get some other little trades together for myself. And if there's anything you want to put in, thank you very much, Paul, for showing us what you've got today. And like I said, keep it up. I think what you're doing is great. You know, if this is working for you, don't even worry about it. It's great. I think obviously I'm good. I'm not toot my own horn. I like my technicals. I enjoy them, and I've spent a lot of time refining what I look for. So, and I think that's where if you can learn a bit more on that side of it, Paul. I'm not saying to go that side, but it can't hurt. It can always help. I think it can help with refining your entries, exits, targets, all that sort of stuff. And I know you've been trying to learn bits and pieces. It's a hard slog, but I mean, that's what we're here for. So anything else, guys, that you want to put in, send them through to support@tradesetup.com.au. And thanks also in the past, Clement. And I know we've got Anne-Marie. I haven't seen her pop up. I know she was listening off and on. She's put in some trades earlier on, and that's, we thank her for doing that also. We're just trying to build that community and see how we go from here. Anyway, guys, thank you for joining me. Yeah, thanks for joining us. We'll speak to you on Thursday. Enjoy, guys. Bye.